Welcome back, everyone. Today I did a little bit of homework. I've got some good alpha. Crypto space has been pretty boring. We are going to take a look at Bitcoin, all your favorites, of course, but I thought I'd share something with you that I don't think people are looking at. I don't think this is in the focus right now. Stocks are at all-time high. Crypto is hovering at all-time high. And I don't think people are really looking into the charts and into kind of different perspectives that we like to do on this channel. So I appreciate you guys tuning in. I know it's not the hypest day. Volatility is down, but if you enjoy this content, as we get into it, I ask that you hit the like button, subscribe, join us, etc. You know the deal. So let's just get into it. We went live a little late because I wanted to really hit this out of the park. Hopefully I do. So as we know, and as we can see, SPX and NASDAQ and really many different individual stocks are either at all-time highs or have broken them recently. This can be an explanation as to why the crypto space is seemingly so dead. I don't know. That's just a speculation. But clearly there is a little more attention, a little more interest at the moment, and it makes sense. Big number go up. We'd seen stocks dip down for months. The return to all-time highs, I think, is welcomed by everyone almost everywhere because, man, up is good, down is bad, right? When we look at S&P, we see that we finally returned. We had a beautiful V-shaped recovery, and we can even use our fib tool to look at some upside targets for later this year, maybe into next year. The same is true when we look at NASDAQ. NASDAQ a little bit farther ahead, showing that strength earlier, breaking all-time highs earlier. This is definitely a reason or a cause for celebration, especially if your portfolio is heavy in stocks, man. I wish mine wasn't. It definitely isn't. But are stocks really at all-time highs? And that is the question that I propose here during this episode, during this live stream. It might sound weird, it might sound illogical, but I'm going to walk you through this. And when I do this, I'm going to try to not tell you how to interpret this. I might share how I feel about it. I'm going to try not to, but I might share it. But I want you guys to really just take this with a grain of salt. I want to hear your thoughts. I want to hear kind of how you interpret this and what this might mean, not just for stocks, but also for the rest of assets and really for the rest of this year. So stick with me. I ask that you get through this part. I don't know how long it'll take. I just threw this together today. I didn't even go over it once, so hopefully it's good. But here we are. We have stocks at all-time high, clearly. So what do you mean, Tom? What do you mean that they might not be at all-time high? We look at Robinhood. Robinhood blasting off here, trading above its IPO levels. We saw Circle do this a week ago or 2 weeks ago. Circle now kind of retracing, not quite the best example for the moment, but we see a lot of examples like this. And to say that it's not at all-time high doesn't make sense. But have you been hitting that 420 a little early today? What's happening here? Well, it's all the lens which you view these things. If you look at them just as, is this number higher than this number, without anything else in consideration, then you'd be correct. They are at all-time high. But when we view this through a different lens, and we're gonna be getting into this through a different lens, one that you're familiar with, you might see it a little differently. Gold over the last year or two has had an insane performance, and this is really out of the norm for gold. Gold spends much of its time sideways as a safety asset. It is risk off. It is not what we would, in general, look for when we're trying to find kind of high risk, high reward or bigger returns, right? Gold has hit about 3,500 after starting the year at just, where were we? Yeah, 2,600, a huge gain for gold. And this is the lens that we're going to view this through. And this is my kind of proposal, or I've seen, to put this into perspective. So when we look at S&P and NASDAQ and all these stocks, they're at all-time highs. But when we look at them through the lens of gold, and this isn't the only lens we're going to look through, but this I think is a really important one. When we look at, when we look at it through the lens of gold, we see something kind of weird, kind of out of the ordinary that you might not expect. And I will admit, when I opened this chart, I was a little shocked. I didn't expect exactly what is in front of us. So in front of us right now is gold, or the S&P divided by gold. So you can do this on TradingView very easily by simply, I'm just going to do it anyway. By simply going to your ticker, typing in SPX divided by gold, you can get this chart yourself. This is on the monthly time frame. So we are looking at a lot of data. In fact, all the way over here is 1931. Extends out to the current date. These are monthly candles. So this is, to begin with, a bigger perspective than we could ever get in the crypto space. But this gives us a really zoomed out view, but a valuable perspective. And something that I seriously just I didn't expect this at all. So we see the all-time low of this value in November of 1979. I'm not going to really get into that. However, what we see is the highs. And this is what we see on this chart is that in 2000, S&P was at its highest valuation versus gold 25 years ago. You can make the argument here that stocks really never recovered from 2000 when you compare it to gold, which I believe is a completely valid and maybe even more valued than dollars that we look at often stance to take, because gold is supposed to be this slow gaining, this slow grinding thing. It is maybe a great asset to be pegged to, or a great asset to look at something as a peg or to judge its real strength. Since 2000, we have seen stocks lose value against gold. And the craziest part is even into, let's say, 2020, that hadn't really recovered by any meaningful metric. Let's actually get this exact metric. What was it? Even into 2020, still down 75, at its highest down 52% from its valuation versus gold. And what do we see happening here now? This is today. We saw this hit a low, and as gold kind of chilled out, and we haven't seen it blast through all-time highs over the last few weeks, those stocks we see this recovering, but that recovery is really showing us a different picture than what we see when we look at stocks against the dollar. Though they are at all-time high, it does kind of seem to be a show, a song and dance, doesn't it? We have another 50% gain or so back to even just 2000 levels. And while I believe that could happen, this is just very different than what we're experiencing just looking at, say, this chart, looking for higher highs, right? What's kind of crazy is even if S&P were to trade up another $1,000 or 1,000 points, which is about 13%, and gold were to not move at all, we still wouldn't be anywhere near, actually we could probably do this. We still wouldn't be anywhere near back to those 2000 highs. And in fact, that wouldn't even put us close to 2021 highs. If we gain 13%, we're really kind of just back to where we were at the beginning of the year. Gold has been dominating stocks, not necessarily in the gain percentage, but in the valuation versus stocks proportionately since 2020. And that's a pretty crazy take. It's not something that I would expect. And really with stocks hitting all-time highs here and gold up, I would have expected this to be much higher. What's interesting is if you look at the S&P through another lens, not just its valuation in dollars, but its valuation versus the strength of dollars, you see a picture that maybe makes more sense or maybe doesn't. And this is, again, I'd love to hear what you guys are thinking. I'm not here to tell you how to think about this. I'm just curious what interpretations you guys can come up with. When we look at the S&P divided by the Dixie, divided by DXY, the strength of the dollar, this is maybe a picture that we're more familiar with. And this does look actually very different from just the S&P, right? When the S&P is divided by DXY, we see a much more parabolic, I'll say ascending triangle type thing, but much more kind of along the lines of maybe what stocks have felt like, I don't know, with virtually just up parabolic movements. And as the dollar is dropping right now, it broke 98 multi-year lows and stocks hit multi-year highs. This makes sense. This chart, when I opened it, I said, okay, this totally lines up with what I would have expected. It totally makes sense to me. Versus what we were just talking about, the gold versus S&P, where this doesn't really hit the way that I thought it would. This is some really cool stuff. Maybe some conclusions or things we could think about is, as stocks go up and the dollar is driven down, is this chart more valuable? Is the gold chart more valuable? Does the gold chart suggest to us that we're actually going to see maybe more strength in gold? See this push down? This doesn't look like the most bullish structure. If we look at it versus the Dixie, I think it's logical that this doesn't really seem like it's ever going to move down, right? It's kind of crazy. This is a different perspective. One showing stocks nowhere near all-time high, and one showing them around kind of what we're viewing in the market, but I'd say more exaggerated. This This is much more parabolic. The down periods seem less intense, maybe less intense or quicker. What's interesting as well, moving on, is if we do the same with Bitcoin, let's say Bitcoin versus the Dixie, we have a different picture as well. We look at this and Bitcoin broke its all-time high versus the Dixie at the same time it broke its all-time high, just in dollars. But the difference is here. Into December of last year, we hit new all-time highs. We pulled back, very clean pullback, moved up again in May, and now we're consolidating again at all-time highs. This does show a different picture. You zoom into Bitcoin versus USD, which we'll get to today, and you'll see something more like this, right? Something more similar to the previous peak in 2021. But you zoom in now and you look at this, and this is not the same picture. Last week closed at all-time high. This week opening basically at all-time high, hanging out here chilling, showing tons of strength. And if you were to ask me, I would say this is probably looking for another move to the upside. We can do the same because this was obviously going to be bullish. We knew that. If stocks are looking bullish against it, obviously Bitcoin's going to be. But when we do the same against gold, as we did with the S&P earlier, we see a deviation. We see something that might be expected, but is I'll say still a departure from the S&P kind of image we got. Bitcoin hit its all-time high versus gold at the end of last year, and it has not recovered that all-time high. Is this inverted? Just press gold. Hold up here. Yeah. This is a much smaller time frame. This is on the day as opposed to like the monthly we're looking at versus S&P. But here we are hitting our all-time high and now hanging out about halfway back to the to that previous mark. If we use our trend lines, this does get pretty clean. It's a little less clean here when we do BTC versus gold. We can look at gold. Where is it? We can look at 𝐂𝐴X. What is it? 𝐂𝐴X BTC. This would be like the native gold valuation against Bitcoin. This is going to be inverted because Bitcoin is second instead of the other examples where gold was second. So I'll just invert the chart here. There we go. And look at how clean this becomes. We talked about this a lot on Friday in the Crown Crypto group. I thought this was some cool stuff. Thanks to everybody who turned out on Friday. That was a fun hangout session. Wouldn't have discovered all this alpha if we didn't have that. When we look at 𝐂𝐴X versus gold, the native valuation, Bitcoin versus or gold versus Bitcoin's value, which is the whole kind of theme of this, we see a really, really clean chart that has developed into, I'll say, a flag that extends all the way back to last year. And what is, in my opinion, the exciting part is if we look onto the days, this literally broke out Friday. That's why Friday's move, I guess, felt so interesting, is that was the first close above this trend line that we have had throughout all this price action when we value gold versus Bitcoin. And into the weekend and even into today, as we can see, this is sold off some. Even into today, we are above that trend line. This is a very clean chart. And when I see a breakout like this on a very clean chart, I pay attention. I think that that is meaningful. I think that this is suggesting that Bitcoin is going to gain proportionately versus gold. I can't say the same when I look at the S&P. The S&P looks like it probably has, like we kind of viewed earlier, 12%, 15% upside, maybe to complete this rounding pattern. But it doesn't look like Bitcoin. It doesn't look like it just broke out and it's ready to go nuts. Yeah, it kind of falling back behind trend lines doesn't look quite the same. So does this suggest, what does this suggest? It can be multiple things. It could say that stocks are going to continue to all-time highs. Gold lose some value maybe or chill out, continue doing what it's doing. God, it's hot in this room. And Bitcoin, man, I just got derailed by all the heat in here. And potentially Bitcoin break all-time highs as well to show strength in that pair, or that gold could potentially fall. Stocks and Bitcoin could stay where they are, and these charts would be driven up as well. Hold on one sec. Okay, good. Or where was I? Gold sideways, gold down, Gold up and everything else up, not as much. There's a bunch of different outcomes, but really the whole point of all of this was there is a divergence on these charts. There is a disconnect in ways when you look at them from what we see just day to day when we look at NASDAQ or we look at S&P that are just at all-time highs looking for higher highs. While it is cause for celebration, like I said, I think that this chart versus gold, and again, the chart versus the dollar versus Dixie, oh, here, this is the last one I didn't show, are reasons to be, at least, not reasons, but they are factors to think about when we're assessing the strength of stocks. Man, I started like sweating and getting real hot. I might have to go turn the air conditioner on. I don't know about you guys. The heat wave is back. It's like over 100 here. And in this room, my air conditioner was on. It just like must have turned off the central air because I'm starting to get nuked. Oh my. Okay, give me one sec. Let's see if I can command the air conditioner to turn on. We'll see. Actually, I missed this chart, gold versus Dixie, because that rounds out everything else. Gold versus Dixie, also at all-time highs. Really everything just showing strength against Dixie, which makes sense. It's been falling. Gold, though, man, I wouldn't count gold out. This also looks like it wants to go higher. Seems that everything wants to go higher. Maybe this is the big, long conclusion. The big, long conclusion is if everything wants to go higher, the source could be the Dixie. The Dixie could continue falling. I would say looking at this chart, that makes sense. Weakness in the dollar can push assets up, and that might be what we're seeing now. Holy crap. Make sure this vent's open. Hold on. Hopefully that works. Hopefully that works. I don't want to die in here. Anyway, I got derailed by the heat. I thought that was pretty good. Maybe I'll try to put my thoughts together more. Did a pretty good job, but here we are. We're probably getting to the corner now, right? Let me turn on subteams. I'm no good in the heat. What's up, friends? How's everybody doing? I got through that. That took 20 minutes. All right, that was better than I thought. I was like, I hope this doesn't take 30 seconds and I'm done. All right. Bitcoin. I'm cooked. Yeah, dude, I'm cooking it here. No pants? I got pants. I proved it. What's up, Skip Factor? What's up, Vince? We're going to look at Bitcoin now. I'm bored of talking about stocks already. What's up, B-Team Crypto? Mike Vollmer in the house. How are you? Ace of Hearts. Humid, dude. It's just like hot and humid. That was good. Different perspective. Thank you. Thank you. I wish I would have not gotten derailed at the end there. But with my ADD, man, 20 minutes is pretty good, actually. It's pretty good. Whole point of it is stocks are at all-time high. But are they? They are. But are they? Depends how you view it. The gold chart, man, is shocking to me. I can't believe it looks like that. It's wild. 60-degree weather, hopefully in Fahrenheit, not Celsius. No, I'm in the Northeast, Leonard, and it's just hot and humid. It's like tropical. I feel like it's tropical up here now. Trade Intuition. What's up, Trade Intuition? Alexander G. What's up, Alex Wells? Matrala. How are you, man? Dinkles. Who else is here? Dylan VA. If you're here today, smash the like button. Say hello. What's up, Bad Fox? How you doing, darling? Georgia. Vol. Bitcoin gonna go nuts or pecans? Pecans are permanently bullish, my friend. What's up, Lucky Thoughts? Good to see you. Randy Greer, Cactus, Tang, Green Day Prophets. What's up, Sea Lost Crunk? One with Nature, I see you, man. K-Jam, Shane. Who else is here? When Moon? I think we're about to moon. I think we's about to moon. Where did this go? Look at this chart. Bitcoin versus Dixie. Look at that weekly close, bro. Look at this. Look at this. Boom. Oh, my air conditioner finally turned on. Thank God. Look at the monthlies. Like, just the Dixie chart. Dixie down, all other ships up. That's what it seems like. Coin also doing very well, maybe foreshadowing a breakout. Coin broke what, a yearly high to a new yearly high, now is consolidating on the day, aiming for 430, aiming for that opening all-time high price. I think it's going to happen. I think it's coming. Look at Bitcoin, nice weekly close here. You know, people were looking at Market Cipher B, links in the video description below, but we're looking at Market Cipher B earlier this month, 16th, seeing this red dot of momentum and saying we're cooked. You know, market's over. Wasn't a bad take. Typically on the weekly is a big time frame. You don't want to see that momentum slow down, which is really what that dot's showing us. But here we go on the open of this week. If we can hold on to this price throughout the week, we got that momentum shifting back up. That's following money flow's lead. VWAP moving up as well. We have a lot of bullish signals going on there. That weekly close really setting this chart straight. Things were looking pretty bad down there, and with that weekly close, things are looking much more bullish. I think the difficulty adjustment went through. We'll look at that in a minute. But this weekly close, here's what I'm looking for. If we see more selling this week, 106K. This was resistance we rejected from. We looked for a short there, I don't know, 2 weeks ago, 3 weeks ago. We broke through it last week. A back test of 106,000, really 105.9, would make for a very bullish chart. Would be a very, very bullish chart. If 106K comes, maybe I'll look to take another position there. We'll find out. Difficulty adjustment did come and go hours ago. Let's see. How many hours ago?